This is Elisa Zhang here. Thank you for joining my story series today. I have Scott Price over here with me today, and Scott has been a very interesting person in my life. I've met him in a few of the meetups with apartments and etc. His story really kind of struck me, kind of very interesting for folks over here that are having W-2 job and thinking about slowly kind of transitioning into retirements. So Scott has reached his early retirement after 15 years of investing in mostly real estate. What is interesting about Scott is he actually invested in multiple different types of asset, which for some of us only kind of focus on one type of asset. So it's very interesting that he invests in a variety of type of assets. And he has a very great philosophy about how to educate his kids on financial freedoms and literacy. So we'll kind of dive into some of that too. Hi, Scott. How are you
Hey,
today?
Lisa. Thanks for having me on.
Yeah. So Scott, I was wondering if you can kind of give us like a quick like cliff note on, your story kind of in a summary. And as we go, I'll be diving into some of the details over there.
Sure. Yeah, I got into real estate primarily years ago by looking at all the different ways that people can build wealth, and it ranges from being in a tech company that might go IPO to to building your own business to all these different things.
Mhm.
And real estate really kept percolating up to the top. So I invested quite a bit in education to get myself familiar with what I needed to do.
Mhm.
I never looked at the classic, okay, spend 30, 40 years at a company or several companies and rely on that retirement plan, and that would be it. That wasn't
Yeah.
really my interest. Even from the time I graduated from college, I was looking into all this kind of stuff. So
Mm.
so basically, I got to the point of saying, okay, well, I'm going to jump in, and about 17 years ago, something like that, I actually got a broker's license so I could jump in full time into real estate,
Mm.
and I did that for a few years, as mostly selling just residential, but still at least to immerse myself in the real estate world, and did that for, I believe, 4 years. And then during that time is when I started actively investing, and bought my first multifamily just from my own funds, from saving up, lived frugally with basically the save now, invest now, to basically
Right.
take dividends later. So
Right.
uh, I did that, and now I'm enjoying the benefits of that.
That's awesome.
And yeah, then over the last 15 years, I've mostly been rolling my profits forward. And one of the main reasons I always worked a W-2 job was actually really two reasons. One of them was so that all of my expenses were covered by my W-2 job. So all of my profits from real estate were rolled back into more real estate. So I
Mhm.
snowballed. And then also I lived fairly frugally. So I use money from real estate plus my own job, and and then I would
Right.
also reinvest that and cash out refi and things like that along the way, and just grow bigger and bigger and do the 1 to 2 to 4 to 8 kind of thing.
Yeah.
And over time, I also diversified somewhat in my various asset classes. So started out in multifamily, still that's my main thing, multifamily, though
Mhm.
I also have some office, retail, land, and singles as well
Mhm.
that I've accumulated along the way.
That's
And
awesome.
yeah, I could have retired, so to speak, from W-2 a while ago, but that was a good plan. It was I had good benefits. I was able to continue to roll my profits forward, all that kind
Mhm.
of stuff. So I finally got to the point a couple years ago where I said, more than making what I am in my W-2 job, and let's just pull the plug, which is what I wanted to do anyhow. So on the
Gotcha.
W-2.
That's awesome. That's awesome. Well, thank you for sharing like the overall stories over here. There's so much good nuggets I'm gonna kind of dig into a little bit more. But first of all, like how tell us a little bit about your upbringing. Like what are some of the things that you feel like in your upbringing that kind of shapes your outlook on, hey, I gotta retire earlier, or kind of more the free thinking. style you have? Yeah.
Yeah, I'd say there's an interesting question. I would say it's a combination. I'd say there's some things from my early upbringing that definitely apply, and then there are other things that I have determined as a goal and thought about how
Mhm.
can I achieve those goals, which really doesn't have doing anything to do with my upbringing. It's more me learning what I need to do to achieve those
Right.
goals. So it's a combination.
Hmm.
And as far as upbringing, I would say especially my father was somewhat entrepreneurial on the side. In other words, he always had these kind of side gigs going, so to speak. He would buy used cars and resell them,
Yeah.
and he had some businesses and things like that. And that rubbed off on me in terms of I did the classic, mowing lawns for kids
Yeah.
and at an early age. And when I was 12, I bought my first car. And
Wow.
the reason I bought my first car is because my father was doing that. I
Uh,
saved up money from my lawn mowing, and I bought it. The only thing, it was this really cool car, it was this cool convertible. The only thing I could do was drive it in circles in the backyard. It was a stick shift, and I would
yeah.
just drive it in circles in the backyard.
Yeah.
But I bought it purely for the purpose of making money on it, and then I
Yeah.
had it paid, a really good return on it, and then I put that money into my cool car that I had in high school. During that time, even at the age of 12, I was reading books about the stock market,
Wow.
about finances, and that was on my own. That was just, I would say, an intellectual curiosity.
Uh-huh.
And the weird thing is that at the age of 12, I was reading books on gardening, wines, even though I didn't drink wines. I mean, it was
So
it
you're
was
like kind of old
it was
soul.
kind
Yeah.
of very eclectic. It's like, oh, this looks interesting, and I'll read a book about it.
Yeah. Yeah. That's so funny. So could you kind of record back, like even before like a 12 years old? Is there like a single moment that you feel like that kind of, because it's very unique, like normal 12-year-old don't go buy a car thinking about investments, right? But could you kind of think back a little bit, like, is it something that your dad kind of mostly encouraged you to do, or is it something that you have encountered that kind of made you think about essentially the sky is the limit, there's no norm that you have to follow? Because at a 12-year-old, maybe even like the teenager age, you kind of, a lot of us kind of like worry about fitting into the crowds and etc. But like, you seems to me like just a free spirit to start with. Yeah.
Yeah, I would say early on there was that I saw an appreciation for hard work.
Mhm.
Neither of my parents had the opportunity to go to college, and neither
Mhm.
of them worked high-paying jobs, generally
Wow.
speaking. But
Yeah.
they worked hard, and they also, like I said, my father was, somewhat entrepreneurial, both businesses as well as things on the side,
Yeah.
and that rubbed off as being an opportunity. In other words, it wasn't just a job, even though they both my parents had what I would call just regular jobs,
Right.
but they, especially my father, also looked at, okay, how can you expand beyond that? Why do you have to be limited by just what you do during your 40 hours? Now, in his case, that meant a lot of extra hours. It wasn't
Mhm.
like it wasn't like he worked less on his job. So
Right.
he worked hard, but it was a more expansive mindset in their case, especially at first, to pay the bills. It wasn't like a
Mhm.
big net worth wealth building things, but at the
Right.
same time, it was the idea that you can be creative, you can do things on the side,
Mhm.
and that rubbed off, and
Mhm.
and that also rubbed off in terms of me having doing little side gigs myself, such as lawn mowing and other things for other people, and then rolling that forward into, not only did I, like, for instance, not only did I read that book on stocks, I actually invested in some stocks when I was 12.
Wow.
I did that kind of stuff pretty early,
Yeah.
and
That's awesome. So it's kind of really a habit of, hey, we have a questions over here, so I'm gonna go research it. That is kind of very important for our viewers to kind of take away. Even though Scott started when he was 12, it's never too late. That mentality of, hey, we have a question, let's go research about it. Right. It's a very,
Absolutely. And that's the part that really started later, because I the other thing I saw was how in some ways it was kind of hard for them, and then also it was difficult for my parents to build some net worth, because again, they didn't have the
mhm,
college, and they didn't have that background, and but they made sure I had that opportunity.
right.
And that, and I mean, it was incredibly important that to them that I went to college. And
Hmm.
matter of fact, when I was 12 years old, my father bought a brand new motorcycle, and I hopped on the back of it, and we went camping. And I mean, just off the motorcycle, went to a campground, and around the campfire. I'm 12. My father said, if you graduate from college to celebrate, we will ride. I lived in Maryland at the time. We
Yeah.
will ride from Maryland to Alaska and back
Wow.
on motorcycles. And he was absolutely, I actually I thought it was so cool, but I forgot about it. And when I went into college, my father said, you need to get a license, because you got to start getting good, because there are some gnarly roads up in Alaska. And I was, wow, he was serious. And when we got to the point of me graduating, what he did was he gave his work a year's advance notice, and he said, we're
Wow.
going to be taking off a good bit of the summer. He was, and he told me that if they gave him permission, but if they didn't give him permission, he would have
Yeah.
quit. He was
Wow.
very, very serious about it,
Yeah.
and I completely believe he would have. And yeah, so it was nice to have that opportunity, and for me to build with higher income and
Mhm.
things like that, to get on my own path.
Yeah, and that's a great lesson that he just taught you over there, is like when he said something, it's probably something he wants to do, but when he said
Mhm.
something, like he kind of carry through with the kids. And I think that's a very kind of important lesson for some other parents over here, is to kind of really carry through the promise that you had with the kids, because they remember things like that. Um,
Yeah, yeah. I
so
actually, I actually
yeah,
wrote a book about the experience, and it is available. It is not a good book, and what I mean by that is this is not going to win any Pulitzer Prize. I don't mean
yeah,
it. Yeah, it's not a bad book, but it's no work of literary art. But I
yeah,
always wanted to write a book, and it's kind of fun for the two of us that there's actually a published book about
yeah,
our trip. And it's mostly a journal, kind of thing.
yeah.
It's a self-published book kind of thing. It is available, but it's
Yeah.
it's
What is
not.
it called, Scott?
But what's that?
What is the book called?
Oh, from Maryland to Alaska and back, a promise fulfilled. And but again, it's no literary work of art or anything.
I'm gonna go read
I
it.
did it mostly as a gift back to him. And
Yeah,
of course, when I actually gave him a hardbound published book, he didn't know I'd even done it,
yeah.
and he got pretty teary eyed, when I
Wow.
gave
Wow,
it
that's awesome. That's extraordinary. I find these stories are very interesting.
to him.
So when fast forward kind of when you went to college, at what point were you kind of introduced to this thought I know it's early on in your life that you already kind of decided you want to go entrepreneur route at some point. Um, but you kind of follow the convention route of, hey, go to college, get a job, live better, essentially that kind of formula. At what point kind of is there a moment where you kind of switched over to be like, hey, I don't really have to work 30 years for this? Is there a aha moment, or just kind of like because the upbringing, so it was never kind of questioned to continue this route? Yeah,
Yeah. There were a couple things that I would say I psychologically had to work against to break through, and one of them is exactly what you alluded to. Good job with a good company is success.
yeah,
And that's
yeah.
that's the way most people define it. And to a lot of people, it is. It's fine. It's
Hmm.
and I've had some really good experiences working at some really good companies with some really good people.
Hmm.
So that's fine. That's not pushing that down for certain people,
Right.
but at the same time, I wanted more financial freedom than that, and I wanted also to to do something that I wanted to do instead of, some corporate monstrosity that may or may not change depending upon wind direction and things like that. So,
Right.
um,
And
so
what are some things that you were kind of like interested on doing, that was potentially not fulfilled at the corporation jobs? Yeah.
Yeah. I mean, partly self-direction, partly independence, partly being the captain of my own ship, own destiny, and then also interest. In other words, I'd rather work on something I'm truly interested in. I am truly interested in real estate. I like a
Mm-hmm.
lot of the aspects of it,
Mm-hmm.
and whereas I generally work with technology companies in my past, not always,
Mm-hmm.
but generally.
Mm-hmm.
And they were usually either team management. Well, at first they were engineering positions, then either team management or program management kind of positions.
Mm-hmm.
And I enjoyed those, but at the same time, sometimes I just worked on stuff that, at the end of the day, or at the end of, I'd say one thing that has been foundational and inspirational to me is the classic advice about deathbed perspective.
Mm-hmm.
And, meaning when you're on your deathbed, what
Yeah.
was important? What do you think is important? And if what you're doing today, is it something that you will be happy that you did, or will it be something that just didn't matter,
Right.
or
Right.
it wasted lifetime that you could have used doing something else.
Right.
And that's why my wife and I, about 16 years ago, actually made a vision board. And
Mm-hmm.
every day, I actually have, I
Oh,
can
the vision board.
show it
That's
to you
awesome.
here. I actually have a list of things that I do. That's a form that's related to my vision board. And it's like, what am I
Mm-hmm.
doing today related to achieving that?
Yeah.
Um,
That's
yeah,
awesome.
I'm going off on a tangent. Can you remind me of your
No,
question?
yeah, no, this is great. This is great because the question was kind of like specifically in certain criteria, like a certain moments that kind of made
Oh,
you flip the switch. But I think you're getting there. Yes.
yeah,
Yeah.
exactly. And for me, it was the research I did on how can I increase net worth significantly and get financial independence. So
Hmm.
I started reading books and started reading a lot of magazines. The second thing, and that's why I started on the psychological barriers I had to work through. The
Hmm.
second one was actually, especially the media. And what I mean by that is I was reading Forbes and whatever, Money and Inc.
Hmm.
and all these kinds of, I literally at one time, and this is years ago when people actually subscribed to magazines, I had 25 subscriptions to different
Wow.
magazines. It was hard to read all those, but at the same
Yeah.
time, and most of them were oriented to, find the right stock, or they really made out, the Mark Zuckerbergs of the world look like heroes, and they kind of made it
Hmm.
look like anybody could do it, instead of realizing that that's an incredibly small number of people who do that, and there's
Right.
people who might be just as intelligent and just as uh, interested in what they're doing, and they don't IPO. But
Yeah.
anyhow, that's when I started looking at real estate. And then when I started reading books such as the classics like Rich Dad Poor Dad and The
Hmm.
Millionaire Next Door, and things like that, that is what really changed my mindset. I would
Hmm.
say I was actually reading the books and breaking through those barriers of good job, good company is quote success, and what the media, at least most of what I was reading and experiencing
Hmm.
personally, which was
Hmm.
oriented towards stocks and
Hmm.
companies and things like
Right.
that. And
Right.
once I
Yeah.
did that, then I started changing my mindset, and I started focusing more on, okay, well, how can I make this real estate thing happen?
Right, right. Makes sense. Because I think if you look at the top 500 richest people, or the most 100 richest people in the world that Fortune had, is I think the number was like 70 or 80% of these were like, more than a half of it is definitely real estate investing.
Yep.
So when the whole world, the richest people, half of it is real estate investing, and the other half probably have it on their portfolio, even if it's not primary. for tax reasons and then whatnot, then kind of get
That's,
onto
yeah, I don't
something.
know if it's exactly those numbers, but that observation is exactly what I saw as well. And the things that attracted me to real estate investing is it was more tangible and
Hmm.
achievable if you work toward it, rather than it's great that, whatever Jeff Bezos has done, or whatever. I'm not, there's no opinion there. It's great that he's as wealthy as he is my
Right,
point, but he's one person. It's kind
right.
of like, saying, oh, I want to be a professional basketball player, and not remembering that, 0.001% of
Right,
everybody who plays basketball actually becomes a professional basketball player.
right,
Whereas
right.
real estate, if you focus on it and really apply yourself, it is achievable. It's not
Hmm.
it's not a roll that it doesn't have to be a roll of the dice. Doesn't have to be
Hmm.
dependent upon you being a trust fund kid, any of this kind of stuff. It's hard
Yeah.
work, but you can do it.
Yeah. Yeah. So it's kind of really matching kind of like the traditional value, American value. It's like work hard. It's not really American value. Like the Asians kind of have that too. It's like, hey, working hard, and then there's a direct impact to what you kind of working towards.
Hmm.
And it kind of
Yeah, and
suits.
it's
Yeah.
somewhat self-controlled. In
Hmm.
other words, it's that you're not at the win. You're not a cog in a wheel of a much larger machine.
Hmm.
You can control it at your own level. You're not in
Yeah.
the cog in the wheel of a big company, is what I mean.
Gotcha. And so now kind of fast forward. So you really, after talking with you personally, I really couldn't believe that you actually started investing 15 years ago. So tell us a little bit more about, when you fast forward, when you're starting to invest to 15 years ago, there's obvious preparation you probably did beforehand, knowing you're always prepared. So what are some preparation you had ahead of time, and kind of like the goal that you had set it to yourself? Obviously it's always a journey. You kind of try to figure out what your next couple goals are, steps are, but sometimes they may not be that way. You have to pivot. But tell us a little bit about what you did to kind of prepare for that first move, and
Mhm.
then that first move when it happened. Yeah.
Sure. Yeah, it was, there are things that if I had to do it over again, I would do differently. Plus the current world 15 years later has actually more educational opportunities than were
Hmm.
even just 15 years ago.
Right.
So at that time, there are several things I did. Number one, like I mentioned, I actually become a real estate broker. Not that I'm saying everybody has to do that. No,
Hmm.
it was just my path. I wanted to fully immerse myself in the world, and everything I did, I was tax deductible, and all
Hmm.
that kind of stuff.
Yes.
So
Yeah.
so I did that for educational purposes, and I said, well, if I'm going to do this real estate thing, I actually got out of my normal track of
Hmm.
working for tech companies, and just did something completely different,
Hmm.
and did that for 4 years before I actually then. That was 2003 to 2007, and saw what was starting to happen in 2007, and plus I was getting a little tired of residential sales, and I said
Hmm.
okay, and I hopped back into tech companies, but um, but anyhow, I did that. I basically got book smart. And what I mean by that is I read a lot about real estate investing, and that's
Hmm.
pretty much it. The thing that I would do differently now is, now there, especially now, but even then there were variations on it. I would have gone to, then they didn't really have meetups per se.
Hmm.
Just certainly didn't have
Hmm.
the number that you have right
No.
now, but there certainly were a few RIAs in the area that
Hmm.
would meet, and some of the big organizations. I didn't do any
Hmm.
of that stuff, and I
Yeah.
would now. I
Right.
would have met more people, talked to folks, participated,
Hmm.
shared ideas, things like that.
Hmm.
But anyhow, for me, the other
Right.
thing was I I I just said I'm gonna do it, and I'm gonna get book smart enough that I feel confident, not
Hmm.
100%, but confident, and jump in. And
Yeah.
my very first deal, not including one. Well, there was a first rental I had, but I
Hmm.
that was actually before the 15 years, but that's a separate story. And I'd say my real investing started about 15 years ago. And I did a development deal on the home that I lived in
Hmm.
and that I actually bought. And by doing that, I was able to double the value of that home. And then when I sold that home, instead of, like a lot of people, it's like woohoo, so I'm gonna get a fancy home and I'm gonna
Right.
do kind of stuff. Instead, I actually went to a lesser neighborhood, a lesser home, but I bought a 29 unit apartment complex,
Wow.
with
Yeah.
money. And so I wouldn't necessarily recommend that either as your first investment property to jump into I mean, that's not a huge multifamily, but
Yeah.
for first step, that was kind of big. I learned a lot. I made some mistakes in buying that. I still own that property, but if I had to do it over again, I probably would have bought something else. I probably
Like
would not have.
something smaller, or like what would you like otherwise buy? Yeah.
Yeah, that it's just property specific. There was some things related to the age of it and the
Mm.
construction that I have remedied in the interim, but it's been very, very expensive, for me to
Gotcha.
do it.
Yeah.
And I would know now not to do that, not
Yeah.
or to come in with a lower price or more capital or something like that.
Yeah, gotcha. Oh, so mostly has to do with cash management. That's obviously a very hot topics right now.
Yeah.
Is if you're buying an older property, I'm assuming that's what you're alluding to. There may be more replacement costs like pipes and etc. Structure issues. So you would need to have more cash reserve to kind of go in and then remedy these issues. Now, is there any other reasons that you would not suggest someone to kind of jump from one single unit to like 29 units? What would you otherwise buy if you were to tell, yourself 15 years ago? Yeah.
Yeah, yeah. I mean, the biggest thing, if somebody has a lifestyle that supports this, and that's an
Hmm.
if, because it may depend upon family and things, if they have a family and kids and stuff like
Right.
that, is the classic house hacking thing.
Hmm.
If you can, if somebody's just starting out, and especially if they're just a couple or maybe one kid or single or something like that,
Hmm.
buy a fourplex and live in one of them. Man, you get a great rate, a great terms on 30-year residential, and you're right there. You get experience being a landlord, and a year later you can go buy something else and keep that fourplex.
Right. Right.
I would have done more of that. I occasionally, when I was younger and had housemates, I did that. I had
Hmm.
housemates, so but it was
Hmm.
just a single family. I had a couple of single family homes, but I always brought in housemates. I still was trying to bring in some rent,
Right.
sharing some bedrooms and stuff.
Yeah. So staying true to Robert Kiyosaki's advice, right?
Right,
Yeah,
exactly.
over there. That's awesome. So the 29 units, that was very interesting because you just went like, because it take a couple years, exactly like some of our you are doing is they do a smaller single family and then they're ready to kind of jump into the big multifamily. Maybe they start from passive investing and then kind of learn the ropes from there. Or, they start with smaller plexes, the fourplex as you kind of suggested, and getting into the 29 units. But I found it just kind of really impressive. Just go head first. Now on the 29 units, were you the only manager for these? Like, how is your kind of team work? And then what are some things, and how long does it for you to kind of figure that out, like in terms of systems? Yeah.
Yeah, my personal model, and I would say my longer term goal is to eventually have maybe a couple employees, direct employees or something like
Hmm.
that. But I, after having been a team manager at big companies and stuff,
Yeah.
I like having independent contractors that I don't have to HR and manage and all that.
Yes.
It's
Yes.
nice, and it's great. And for the most part, because generally have properties that are not even close to me. All my properties are in Washington State. I have owned out of state, but I've sold just one. Actually, I had a 40 unit in Memphis, and I sold that one. And so I'm back all in Washington State. Everything I own is around the state, but still some of them are a 5-hour drive away, so they're not close. And I don't ever use proximity as a criteria for me. And so because of that, I want to rely on the best available locally, and I do not want to go through developing the infrastructure of my own property management company. That's not what I'm in it for. I'm actually in it for simplicity as much as possible, number one. And then number two, not having to create these little teams that are in various places, or the flip side of saying, okay, well, I'm going to, even if it's not near me, I'm going to focus on one really good town in Washington and build my team and build my properties there. I don't want to be limited by that. So my model has always been to hire property managers. And even from the beginning, like that first 29 unit, I had a property manager. Number one, it wasn't very close anyhow, but on top of that, if it doesn't cash flow with property management, how am I going to scale? If you're starting out, it's good experience, and I would actually in some ways recommend being your own landlord for a period of time. But if you're doing it long term, you're just buying yourself a job. You're just buying yourself going out there, spending your time doing what other people do as a business. And when I pay my property managers, they earn their money. Some people gripe about it and all this kind of stuff. And it's like, no, that gives me, they earn their money, and that gives me time and availability to go and get another property. And to build up that way. So all my contractors, property managers, all that kind of stuff, they sub. They're not direct employees, and that's always been my model. So it's me and my wife, and that's it. As far as quote employees of my company.
Gotcha. So yeah, I totally agree, because just a little insight into that too is a property management company actually gets paid very little compared to the hours of work that they have to put in. And so if you're not hiring them, then you're doing kind of like the lower paying job, is something that you should be kind of think about, right? For our viewers, in terms of time management, what is your time worth? That was always the question over there.
Exactly. And they deal with some hard stuff too. And, I will say, I guess I'll very quickly summarize that one deal I talked about where actually before my 29 unit, I had one rental property, and that was when I got out of college. My parents lent me some money for the down payment. I paid them back, but they lent me some money, down payment for a condo. I then had a housemate, and then I moved out of that into a regular house, and I kept the condo as a rental. So that was actually my first rental. But the first tenant was great. The second tenant, real pain in the butt, and they're always late, and they had all these excuses and all this kind of stuff. And I said, man, I'd read all this stuff, and real estate sounds really great, but tenants are really a pain in the butt. And I sold it. And I got into day trading and stocks and all this kind of stuff. But they kept coming back. And then finally I figured out that I just didn't, that's not my strong suit in the whole value chain of doing the property management part. And there are people who do that. And so when I realized that, I was like, okay. And then I got back into real estate.
Right. So that actually cost you a couple of years because you were doing day trading, but because that one negative experience kind of cost you something that's probably not measurable, because who would know, like you may have retired in 10 years or 15 years versus
Absolutely.
that.
I would have more real estate, and they would be, worth more just because of the inflation train. I would have bought it longer ago.